in any event, the gist of the discussion is this. Is gold in short supply, or is gold over-owned? And to that question, I want to answer with very great conviction. Compared to the monetary assets in the world, gold is a very small percentage. In other words, the percentage of monetary reserves that is held in gold has diminished over the last 50 years meaningfully. In other words, there's less gold and more money.
Hello everyone and welcome to another edition of CEO and Market Expert Interviews. I'm your host Lucian. Most of you know me as Triangle Investor from social media. My guest today is Dr. Marc Faber. He's a Swiss investor based in Thailand, publisher of the Gloom Boom and Doom Report newsletter, and the director of Marc Faber Ltd. Marc, welcome to my show. It is great to have you, sir.
Well, thank you very much for having me on your show. And knowing that you're from Croatia, I'm very happy because I'm one of the few people that actually been to Croatia during the time of Tito. In other words, a long time ago, I went there. My mother took us there as children, and it was 1954. So it was long before the transition
a long time ago.
into a capitalistic market-based economy.
Yeah, that was a Yugoslav economy. Let's start, Marc. Let's start. I watched a lot of your interviews and read a lot of your reports. In one of them, you have stated that the contrarian plays are likely to be found among European equities, treasury bonds, emerging market equities, especially Hong Kong and China, the energy sector, gold miners, real estate, and non-US dollar currencies. My question to you is, how would you prioritize that list? What is the best contrarian play right now?
Well, I mean, you're not asking a very easy question because you're always seeking the best in life, especially men looking for wives. And what they end up usually with is the worst.
Yeah,
That
agreed.
is the pattern. But I mean, I think that when expectations about something are very high, like you look now at the Magnificent Seven stocks, Meta and Google and so forth, and others, notably Nvidia and Tesla, and the expectations are very high for future profit growth. When a small mistake happens, when a small disappointment hits, the reaction is huge on the downside. Whereas if you look at neglected sectors, say you look at today real estate in Hong Kong, China, you look at Chinese stocks, you look at European stocks, although I have to say in the last 6 months, some of them have gone up a lot. So they're not as attractive. But in general, you look at markets that are neglected and depressed, then when something goes wrong, the downside is usually not very high. Frequently on bad news, stocks start to move up again. So I'm interested to look at markets where expectations are very low. Now we take, say, treasury bonds. The negative sentiment about treasuries has never been this high for the last 30 years. So everybody is bearish about bonds, everybody is short bonds. It doesn't mean that they will go up, that you will make money. But I think that maybe the negative sentiment is overdone and that we could get a bounce in treasuries because interest rates come down due to economic weakness in the US. My view is that the US economy is far weaker than the government is saying.
Yeah, it's very challenging actually to invest money today for an average person on the street, average investor, especially this inflation environment. And since every inflation eventually ends, like you said, in deflationary bust, the economic damage caused by the coming asset deflation is likely to be colossal. You
Yes,
said
yes.
that. Yes, the question investors should consider is no longer about what assets will go up the most, but about what assets are likely to decline the least. And I
Yes.
like that approach. And what are those assets that will probably decline the least? You mentioned some. Can you name a few more?
Well, I mean, I tend to believe that dividends can be cut, yes, but usually stocks with a high dividend are more defensive than stocks that don't pay anything at all. And if a stock pays out a 5% dividend, maybe they'll cut it to 2%, but there's still some dividend. So I like, in general, dividend paying stocks. Number two, as I said, I mean, in emerging markets, we have some markets that are high and expensive, like India, and it's likely to decline. But we have other markets that are very cheap. I mean, I bought a long time ago, I bought Bank of Cyprus. I bought Bank of Georgia. And I bought not long ago, maybe a year or 2 years ago, Bank Halik in Kazakhstan. I mean, I don't feel comfortable with anything. Don't understand me as an investor. You're always on your edge that something can go wrong. And I think a lot of things will go wrong, especially with the tariffs of Trump. But these stocks have a defensive character, whereas highly priced stocks with a high PE and no dividends have a high volatility factor.
That's a good point. You mentioned Trump. What's your take on the recent visit of Zelensky to the White House and the fact that the Ukrainian leader was told to leave the White House after an angry exchange with the US president? What message was sent from that fiasco, if I may call it, and what do you think will happen next?
Look, I think, I mean, I would have voted for Mr. Trump in 2016 and again now. But the fact is, he is a very volatile person who takes decision without having analyzed the situation carefully. And I think a lot of his decisions will backfire. Now, don't misunderstand me. I think Zelensky is a horrible person. He's a user of people. But to be fair to him, he's been supported by the Europeans and the Americans until now, amidst a lot of corruption. But who else, who wouldn't do as he does, take the money when he comes? You know, if you can pocket in $1 billion and give 100,000 back to some stupid US government official, then you do it. That's what he did. And the whole situation creates an environment of great uncertainty, because someone can walk into Mr. Trump's office and upset him, and he kicks him out, essentially. Or someone can walk into Trump's office and tell him something, and Trump finds this a good idea and does it. Then the next day, another guy comes in and says, no, it's a horrible idea for these reasons. Then he reverses the decision. That is, for an investor, a major problem. And I think you will see a lot of volatility in markets.
Yeah, probably yes. What about Europe? Do you believe that from this geopolitical games, will Europe become stronger or weaker?
Well, Trump is a step in the right direction to reduce the power of the socialists. You know, since you are from Croatia, that socialism didn't work, period. And people were depressed under socialism, and their standards of living were very poor. But the Western people, especially the rich kids that have wealthy parents, they grew up, they don't know that. They've never seen the disaster that socialism brought about in Eastern Europe, in China, in Russia, and so on. So they are voting for socialism and socialists. But now I think and I hope the mood is changing somewhat, that young people realize maybe after all, it's better to be more conservative and vote for the AfD in Germany and equally in France and so forth. So I think we're moving probably in the right direction. That's what the stock market is saying. I mean, the German stock market has gone bananas in the last few days.
Yeah, actually it is. German stock market is up pretty much. I want to hear your take on gold as well. How do you see gold going forward? And is there are you a fan of hard assets holding like gold and other assets?
Yes, Germany is up in US dollars 17%. Well, I think if you analyze it logically and with common sense, we have governments, they have deficits, okay? The deficits arise because they spend too much and then they don't collect enough tax. So you have a deficit, fiscal deficit, and the tax is the rate of inflation that you get from that action. Now, that action, the deficits, lead to more inflation if they are financed by money printing. If you don't print money, it should actually not be inflationary. But with printing money, it becomes inflationary. And I think if the Europeans can move to somewhat reduce these deficits and cut government spending, then the outlook will be reasonably good. But you understand, once you tell people, look, I give you $500 a month or 1,000 euros a month for each child you have. When you retire at 65, I give you 2,000 euros a month, and so forth. How are you going to tell these people, I'm going to cut this by 50% or so? This is in a society, once you give out something, it's very difficult to take it back. My view is the best is to do as little as you can in a society, that people assume own responsibility. You understand? The first humans, the animals, they don't have social security. They look after themselves. They're sick, they're going to die. That's the way it is. They're
Yeah,
hungry, they have to go hunting. Nobody is handing them the food.
yeah.
And so my view is we've moved into a society that is a bunch of entitled people. They think the government should do this, the government should do that. Yes, it's all possible. But then you have at the end the socialist system where the government does this and the government does that, but the government forces you to do this and that also.
Yeah, yeah. I want to hear your take as well on gold vanishing from London at a record pace. Over 64 million ounces flowing into the US since November 2024. Gold delivery delays have stretched from 2 days to 2 months. What do you make of that?
Well, I'm not sure, but I could imagine that there is a shortage of physical gold in the US. I mean, I think there's a shortage of physical gold everywhere. But you asked me, the first question was, do you like hard assets? I mean, I believe the current financial system is not sustainable in the long run. Now, is it sustainable for another 5 years? Yeah, maybe they can inflate, and then the inflation rate goes to 20%, then 50%, then 100%. It's all possible. But one day the hour of truth comes. Now, gold and other physical assets like silver and platinum and say real estate, you cannot multiply or increase the supply at the same rate, then you can increase the supply of paper money. So the paper money will continue to go down against the physical commodity or physical asset. You follow? I
Yeah.
print money. So in order to buy an ounce of gold, which is constant, basically the ounce, I need to pay more and more paper money. So it means, of course, I want to have some assets in gold and silver. Number two observation is this. Over the last 20 years, an enormous amount of wealth has been created. You look at the list of billionaires in 1980. In 1980, this is now, 60 years ago. So there were 7 billionaires in the world. 7. Maybe there were 10 or 12 because there are, drug cartels and so on, but basically very few. Now you have thousands of billionaires, thousands. And a billion is not what it used to be. All these people, in my view and my observation, I'm a financial advisor. I have a lot of extremely wealthy people who are readers of mine and also clients of mine. If they have 3% of the money in gold, is about all they have. Then they have a billion, or say 100 million, 100 million. They may have 10 million in gold or 5 million. But I see very few people who say have 100 million and they have 30 million in gold, 30%.
Yeah, but what is that telling you? How will the monetary system actually look like in 2035? Will there be any monetary system?
You're asking a very, very good question. Will there be a world with humans around in 2035? Because the way they move towards World War III is at an alarming pace. I mean, this Netanyahu, as much as some people may like him, but basically he's a very dangerous character. Possibly he will trigger some kind of a major war.
Yeah, that is also a possibility. Okay, how do you see financial markets in near future? Let's say 2025, 2026, with all these geopolitical and financial tensions. I don't know if you watched the movie Margin Call when Jeremy Irons asked, "Is the music just slowing, or there is no music at all?"
Yes, this is a very good question. Well, there are many things that happen in transition times. I give you an example. In year 2000, the tech stocks peaked out. And in 1973, the Nifty 50 peaked out. And in 1989, the Japanese market peaked out. Japan in 89 is more than 50% of global stock market capitalization. Okay. In 73, the Nifty 50 broke down. In 2000, tech broke down, and it dragged down everything, everywhere. In 1989, Japan went down, but other markets in the world went up. I think this is a possibility in the present situation that the Magnificent Seven will start to go down massively, and the money will flow into other sectors. This is a possibility.
Yeah.
So that's why I said I would invest in other sectors.
Yeah, that brings me to the next question. Should we increase cash holdings? I mean, are the days of cash is king forever over or not?
I always hold cash and bonds, say around 30% in my account, 25% cash and bonds. Of course, I shift maturities. Either I'm very on short-term paper or on very long-term. And the problem I have with cash is this. When I grew up in the 50s, cash used to be safe. My grandparents used to say, every month you have to save 10% of your salary and put it in a safe deposit book and so on, and you will be okay. But the safe deposit box, sorry, is not okay anymore because the rate of inflation is frequently higher than the interest you get on your bank deposits. So I would say, I think you have to diversify. Actually, you and I, we don't know what is the safest. And the central banks, they don't know either. It's a perception. People say, oh, the dollar is a good currency. Maybe now, but maybe in 6 months, no.
Yeah. You mentioned central banks. Do you see them continue to aggressively add gold holdings?
Not in the US, but it could happen in the US as well. If in the US they suddenly discover that they have very little gold, as I suspect, but if they discover that, they'll buy it, yes. In any event, the gist of the discussion is this. Is gold in short supply or is gold over-owned? And to that question, I want to answer with very great conviction. Compared to the monetary assets in the world, gold is a very small percentage. In other words, the percentage of monetary reserves that is held in gold has diminished over the last 50 years meaningfully. In other words, there's less gold and more money. And as a result of that, I think the price will be relatively stable or go up. But there are other commodities that are probably cheaper than gold.
Silver.
Platinum, wheat, corn, soybeans. The last 2 years, suddenly cocoa went ballistic. Last year, coffee. So, this is the viciousness of price inflation. It's not that all prices in the system rise evenly. No, they go like this and then like that and everywhere. And that makes it very difficult for the small investor to make money.
Yeah, I see your point. So the food stocks, gold, platinum, precious metals. Actually, you didn't mention silver. Is silver a good hold?
Yes, I think so. But I prefer gold.
So you prefer gold over silver? Okay, that makes sense, of course. Uh, okay, let's move on. I want to hear actually. I want to pick your brain on the BRICS. How do you see BRICS format in the future? Probably not like this as we have it today. What's your take on BRICS going forward?
I think BRICS is an expression that the majority of people in the world and the majority of governments in the world, they have enough or had enough with the neo-colonial system of Western countries, where the colonial system has been disbanded. I mean, countries have become independent and so forth, but they're still being influenced and run by the Western imperialistic countries, notably represented by the US, the UK, France, and so forth. So these countries, China, India, and Brazil, Indonesia, that are very population rich, they say, okay, we don't want to be kind of, told what to do. We have our own interest. And so they formed, as opposed to the UN and these organizations, like the World Bank and so on, they formed their own organization. So it's less about BRICS than about the rejection of the United Nations and the EU and the NATO and all these institutions that are basically ruled by Western nations.
Do you believe that China will be the biggest winner of this geopolitical mess we have?
Yes, I think so, but we don't know for sure. But given that stocks are relatively low in China and especially in Hong Kong, I would take a bet and invest some money in Chinese and Hong Kong shares.
So you are staying out currently of the US stocks, Canadian stocks, even the commodity stocks.
No, that's not what I said. Throughout my life, my largest holding has been gold, physical. And I also own shares in the various portfolios that I look after. And but you have to acknowledge that gold miners have performed miserably. So I have them on the list of stocks that are neglected and could go up substantially. But equally, the gold price is no longer as cheap as it was a year ago. It's up 30%. And the gold shares are not likely to move up when the gold price goes down. So I'm a little bit cautious and would not recommend an overweight in gold shares since they performed so poorly.
Okay, that's fair enough. Actually, that was my last question. Marc, thank you for coming to my show. Great chat and great insights, and I look forward to host you again.
Yes, thank you very much. Nice to be with you.